Well, hey everybody, and welcome to the Animal Donut channel. My name is Jeff Luke. I am a professional photographer, and I'm also the author of Stock Market Intelligence. And today we are going to talk about profitable companies and how you can spot them. The reason I'm making this video is because I think that investors need some tools that will help them be better investors. Because you need to be able to look at a company and see beyond just the price jumping around from here to there to there to there. You need to be able to understand what's going on inside the company as far as how much money they're taking in, which is their revenues, and then how much is left after they pay all of their operating expenses and costs and on their employees and things like that. So I am going to help you to take a look at these companies. I made a video recently and it's about unprofitable companies. I'm going to put a link to it in one of the cards above, but because I've already done that video, I want to do this one because this is the other side of the balance. You know, you need to know about unprofitable companies so that you can be careful and cautious and not get involved buying a stock in a company that's not making any money. But you also want to be able to recognize when you are looking at a company that might make sense for you. So before we proceed, I should just tell you that we're going to be talking about 5 stocks today. I own stock in all of these companies. I purchased the stocks before 2022 even began, and I'm not a trader, so I'm not going to be selling these stocks anytime soon. I'm going to be holding them all year long and probably well beyond that. So anyways, I just think that for the sake of full disclosure, you should know that I own the stocks that I'm about to talk about. Now the first one is Veeva Systems. And Veeva Systems is the leading provider of cloud-based software solutions for the life sciences industry. The thing you need to know, just the basics, is that this is a profitable company, okay? There are a lot of tech companies and software companies out there that haven't yet made any money. Veeva Systems is not one of those companies. They're profitable. And what I'm going to show you about Veeva, I will show you about the other companies. The information here is going to be available online on the company's website and download the annual report or the quarterly reports. You could also go to a service like Value Line or Morningstar, and they all provide this is basic financial statement information. And this is from the income statement on the financial statement. So the revenues for Veeva Systems, this is trailing 12 months. The revenues were $1.76 billion, and then the operating income is $0.48 billion. So this is $480 million, and then the net income is $0.43 billion, which is $430 million. So anyways, this is what you need to know about Veeva. It's a profitable company. The next one I want to talk about is IQVIA. And IQVIA is a leading late-stage contract research organization. They're known as CROs, and they are a dominant player in life sciences, data, and analytics. And I think one thing I want to mention is Veeva is also in the life sciences industry, as is IQVIA. Not a coincidence that I invest in these two companies. I have a strong interest in sciences. My college degree was in biology, and so I tend to stick with companies in industries that I understand well, because then I can get a grasp as to the relative strength or dominance of a company in an industry. And so anyways, Veeva Systems, which we just talked about, and IQVIA are both companies that I understand really well. So anyways, IQVIA is also a profitable company. And if we look trailing 12 months, their revenue is $13.54 billion. And the operating income is $1.24 billion. And the net income is $0.77 billion. So in a nutshell, IQVIA, also in the life sciences industry, primary or dominant CRO organization, and they're profitable. The third company that I want to talk about, which is also, of course, profitable, is NVDA. And NVDA, as you may have heard about it, They are the top designer of discrete graphics processing units, otherwise known as GPUs, that enhance the visual experience on computing platforms. And as you probably have heard, they're also being used in self-driving or autonomous vehicles, anywhere where you have a lot of visual data coming in through different cameras and needing to be computed and analyzed in order for example, the car to figure out what the road looks like and if there are other vehicles and people and things like that. So that's what GPUs help do, and NVIDIA is the best designer when it comes to making these GPU chips. The company's profitable. The trailing 12 months, their revenues were $24.27 billion, their operating income was $8.58 billion, and their net income is $8.21 billion. So that is NVIDIA. Thermo Fisher Scientific. This is the premier life sciences supplier. They make all kinds of devices and machinery that the life sciences industry uses to analyze different materials, different chemicals, different molecular compounds. They make machines for high pressure liquid chromatography and mass spectrometry and stuff like that. They're kind of the biggest, most powerful company in that whole industry. They're located in Waltham, Massachusetts. They have an unmatched portfolio of products, resources, services, and manufacturing capabilities. They're also a very profitable company, $39.06 billion in revenue the trailing 12 months, $10.74 billion in operating income, and $8.57 billion in net income. The last company we're going to talk about here today is Adobe Systems. Adobe dominates content creation software with the iconic Adobe Photoshop and also Illustrator. These are part of the Creative Cloud that a lot of artists and photographers and graphic designers use. They're on the subscription model called Creative Cloud, and anyone who creates content or works in photos or videos or film has heard of and probably used Adobe products. They're a profitable company. They've been around for a long time. Their revenues for the trailing 12 months are $15.79 billion, and the operating income is $5.8 billion, and the net income is $4.82 billion. So there you have it, 5 companies, all profitable. I bring this up because when I invest, I don't want to take chances in investing in companies that haven't really figured things out yet and are maybe hoping that their products or services will one day be profitable. Because at the foundation of investing, you become a part owner of a company when you buy its stock. And it doesn't make a lot of sense to me to buy stock in a company that may be losing money when your goal is for the value of your stock, you would hope, to go up in the future. So some people will invest in companies that are not profitable as speculations, hoping that the companies will be successful, and there's nothing wrong with doing that. I just think that you should be aware going in whether the company is unprofitable or profitable. And so that brings us to the final page in our flip chart here. When you consider any stock for investment, you should know beyond the shadow of a doubt whether the company is earning profits or suffering losses. And if you are clear in your mind on these 2 items, you will be in a different category of investor rather than just chasing hot stocks and hoping the stock price goes up and up and up over time. You will be able to look at the company and judge for yourself whether they're making profits this year, whether they made profits in the past few years, and then you can have a certain confidence in understanding that the company is in good shape and that it has a chance to grow and continue with its profits into the future. What I like about investing in profitable businesses is that, like these companies that I'm just talking about here, when I invested in them, I know that they are well-run companies, and I don't have to worry. I don't have to worry about making a decision next week or next month or next year about should I sell this, should I hold it, what should I do? When I invest in one of these companies, it's with a lot of confidence, and I just buy it and then just put it away. I mean, I'll check from time to time. I like to see what's going on with the companies, and I will check the stock, but it's not with the goal of selling it because of something that I saw in the news. When I'm investing in these companies, it's for the long term. Hope this has been useful. If it has, please give a like, thumbs up to this video. Also consider subscribing to my channel, and that way you'll be notified when I make more new videos like this. So thank you for watching, and I will see you in the next video.